Hello. What a November, right? This is quite a crazy month. Especially after the chaos of the September and October period, where there was a bloodbath in the REIT market. November was quite a quiet month for me though, because I ran out of bullets. If you've been following this channel, you know that I bought a hell lot of REITs for the past 2 months. I'm out of bullets, dude. But for this month, I focused on just one REIT, and that was based uh, pretty much because of an analyst or maybe a bunch of analyst calls to sell REITs. So actually, I wasn't intending to buy a lot, but when the analyst called for sell, I think there'll be a lot of panic and just a lot of people selling all over the place. And therefore, when people are selling in crowds, you have to go in and buy lah. I think that's quite obvious. So I focus on just one REIT, and in particular, I compared the Keppel REIT to Suntec, MPACT, and FCT. Let's talk about it. So this was the movement of the 10-year Treasury in the US in November. It was crazy, right? In October, it went to 4.2%, dipped to around 4%, and then spiked up to 4.2%. But of course, there was a very significant soft print in the US inflation, where things are starting to moderate, I think. And if you look at the data recently in Germany, in the eurozone, and even recently for South Korea, inflation is just all coming down from lower energy and easing of the supply chains and food prices. And you can see that right now it's crazy, right? 10-year Treasury is now 3.5%. So in 1 month, this fella has moved like 70 basis points. That's crazily high, right, for like a bond. So there's been easing of financial conditions, which again shows, right, that when there's panic, you have to go in and buy, because you just have one print of economic data, and everything will just shift, and the herd will just start running away. So I was quite glad that I bought a whole lot of REITs in the October period. In this video, I talk about it of my purchases. You can go check it out. But let's look at the analyst calls that triggered my buys. So this was the trigger actually. So a couple of analysts called for sales in MPACT, Keppel REIT, and FCT. And over here, it seems that people are also calling for sales of Suntec REIT. Which is quite understandable because the third quarter DPU was just 2.08 cents, which was quite below last year. So I think it was below consensus quite a lot. So for me, right, it was whether or not I should. It was quite clear that I should be buying something, but it wasn't clear which of the four I should be buying. So whether I should be buying MPACT, Keppel, FCT, or Suntec. Actually, I bought something, Keppel REIT, on the 4th of November. You can see that this is one day after the report came out, right? But actually, I didn't know about the report when I bought. It was just that everything was falling like mad. I didn't know what was happening, so I just go and buy. So like 2 or 3 days after I bought, then I realized there was this report, and I looked through it, and I was very sure I wanted to buy something. So I was just comparing which one I should be focusing on, because I had very limited bullets by then. And after doing my analysis, I decided, oh, it's gonna be Keppel REIT, and therefore it was a second trigger on the 23rd of November, and I bought it 86 cents, which was below where I bought it on the 4th of November. You can see that it was like 3 weeks after I first purchased that I bought again, right? I had really very limited bullets left already. So this was the only 2 bullets I fired in November compared to October, right? Where I fired like 6 to 8 bullets, man. This was a very quiet month for me. But what I bought in October was quite a lot higher already. So I was quite happy with my purchases. So this was the analysis that I did for the 4 REITs, and why I in the end decided to buy Keppel REIT. So the November 3rd price when the analyst report came out was flowing 89.5 for Keppel, 128 for Suntec, 157 for MPACT, and 196 for FCT. So these are the statistics, roughly, because things are moving so much, right? So DPU is around these levels. You can see I put a question mark for Suntec because I'm not very sure what the full year will come out to be though. The third quarter was around 2.08 cents, so full year should be around 8 plus cents. But I don't know what the impact of the interest rates will be coming in, so I'll say it's roughly 8 cents. NAV is a lot more stable though. These are numbers. Gearing, ICR numbers. These are the before perp numbers though. And these are the yields and the price to book. So take the price divide by NAV, you get the PB, and the DPU will be this one, divide this one. So these are numbers. So this is the risk curve, right? Risk curve, and I had to decide which one I wanted to buy. So it was first of all looking at the yield, right? 6.6, and then this three were pretty much similar, right? Around 6.3%. So if you look at these three and you compare, right, which one would you choose? I think the first thing that's very obvious is that Suntec should be out, because for the same yield, right, you see Suntec's gearing is 44%, ICI is 2.7, and then FCT, right, is 33 and 5.2. MPACT is 40 and 4.4. So it's very clear that Suntec should be out, because for the same yield, right, this one is so much lower yield, so much lower geared, right. So this one is much higher geared, and yet it gives you the same yield. So this one is out immediately for me. This one is out. So if you compare MPACT and FCT, again the story is the same, right? 6.3%. In this case, even the price to book is also roughly the same, 84 and 87. And then the gearing for this stuff is also much higher, 40 and 4. And then ICI is 4.4. So FCT is a definite clear winner here, right? Between the two options. Furthermore, right, FCT is all in Singapore, right? And this stuff has stuff in Hong Kong and China and Tokyo and Korea. And right now it looks like Singapore is like a bedrock of stability, right? So it's very clear, right? Between these three, I should be choosing FCT, man. So the question now is between FCT and Keppel REIT, which one should I choose? So it's a bit of a difficult thing to say, because on the yield perspective, Keppel REIT is higher though, 6.6, and this fella is 6.3, right? But on the gearing perspective, this fella is much better, FCT, because it's lower geared and the ICI is much better. So you see this number is higher, this number is lower. So this number is lower, this number is higher. So FCT is lower geared, but it's also lower yielding. On a price to book basis though, Keppel REIT has the edge, being even lower discount, higher discount to book. So it's hard to say, between Keppel REIT and FCT. I had a tough time deciding which one to choose. But there was two news that made me decide on the Keppel REIT. First of all, back then, there was the of course the sale of the NTUC malls from Mercatus. And it was rumored that the Link REIT, CICT and FCT and FPL were in the front runners. I was quite clear that I didn't really want to buy anything that is in possibly gonna buy the most, because I think it will involve quite a lot of equity raising. So if FCT and the parent of FPL is to buy the Mercatus malls, I think they will need equity raising exercise. So I thought I wasn't in a big hurry to buy that stuff. The second piece of news, of course, was to read the news, right? And projections were for Singapore offices to grow on the year-on-year perspective because of the demand for office spaces, especially after what's happening in Hong Kong, right? The COVID problem, right? Singapore is fast emerging as a trusted hub for businesses. So I think the office dynamic in Singapore looks quite good, though. So on that perspective, and given that it was quite a trade-off between gearing and yield between FCT and Keppel REIT, I decided that I would fire the second bullet at Keppel REIT, and that was why I fired the bullet at Keppel REIT at 86 cents. So I think the Keppel REIT is cheaper, but it's also riskier because the gearing is higher. But nonetheless, I think this exercise pretty much shows how I plot the risk curve, and then I choose the optimal investment at the point in time, right? So at the point of time of choosing to buy something, which reward is the highest per units of risk, right? So in this case, it was very clear that between these three, FCT is the winner, and between these two, I think Keppel REIT had the slight edge, so therefore I opted for Keppel REIT. But subsequently, right, it's quite to say, because the recent report says that analysts are now expecting rental growth for offices to contract some 5% instead of expectation of a 7% increment previously. I guess it's because of the impending recession that everybody is predicting, and so therefore maybe my Keppel REIT the projections is not very right already. For the retail perspective, people are still also lowering their forecast. Industrial is still supportive though, so I was quite happy to see this number, these projections, because I bought a lot of Ames REIT previously, right? So I talked about it in this video. You can go check it out. So I think overall, I think the somehow it feels like the inflation story is somewhat peaked already, and now people are talking about the recession and the impacts already. So I think that will be the main theme going forward for the last month of 2022 and maybe for 2023. So well, good luck for everybody, and let's have a good last month before seeing 2023.